Good day. Starting your investing journey and not sure which ETF to pick? Don't worry, today, I'll show you my top 3 beginner-friendly ETFs that any Aussie can buy, all explained with simple animations. First up, the classic, Vanguard Australian Shares Index ETF, or VAS. VAS tracks the S&P ASX 300, giving you a slice of Australia's 300 biggest companies. Think Commonwealth Bank, BHP, Wesfarmers, and Woolworths. All in one trade. It's low cost, pays regular dividends with franking credits, and is a great way to earn a broad slice of the Aussie economy. In 2024, VAS delivered a total return of 11.4%, made up of about 7.75% capital growth and a 3.65% dividend yield, excluding franking credits. Over the last 5 years, VAS has returned around 8.3% per year on average, and over 10 years, about 9.1% per year. It's the largest ETF on the ASX with over $17.7 billion in funds under management. VAS also pays quarterly dividends, often with franking credits, making it a favorite for income-focused Aussies. The ETF's low fee, just 0.07% per year, means more of your money stays invested. Next, the iShares S&P 500 ETF, or IVV. While Australia's market is strong, it's just a small part of the world. IVV lets you invest in America's top 500 companies like Apple, Microsoft, and Nvidia, all from the ASX. This ETF adds global diversification and exposure to the world's most innovative businesses, perfect for building a balanced portfolio. Over the past 10 years, the S&P 500 has averaged around 12 to 14% annual returns in AUD terms, though this can vary with currency movements. IVV is a great way to diversify globally and tap into the world's biggest and most innovative companies. It pays semi-annual dividends and has a low management fee, just 0.04% per year. IVV is one of the most popular global ETFs for Australians wanting international exposure. Third, the VanEck Morningstar Wide Moat ETF, or Moat. This one's inspired by Warren Buffett's philosophy. It invests in US companies with a wide moats, meaning strong brands, pricing power, and lasting competitive advantages. If you want to follow the world's best investors and focus on quality, Moat is a great option to consider. Over the last 5 years, Moat has delivered annual returns of about 13% per year in AUD. Its portfolio includes names like Microsoft, Alphabet, and Pfizer, companies with long-term staying power. Moat is rebalanced quarterly to keep only the best wide moat stocks, and it pays dividends semi-annually. The management fee is 0.49% per year, higher than VAS or IVV, but you're paying for a more actively managed, quality-focused strategy. With just these 3 ETFs, you can own hundreds of top companies, diversify across Australia and the US, and follow proven investing strategies, all without picking individual stocks or stressing about market swings. Remember, this video is for education only, not financial advice. Always do your own research or talk to a licensed advisor before investing. If you found this helpful, hit like, drop your ETF questions in the comments, and subscribe for more simple Aussie ETF guides. Which ETF should I review next? Let me know below.